Okay, Lydia, thank you for your patience. Everyone at investing.com and regular F.A.C.E members, Lydia Finkley is my go-to person when it comes to the British pound and cable. So looking forward to hearing your voice, Lydia, and seeing what you're seeing here in cable. Hi, Lydia.
Good morning. Hey, Dale.
How are you?
Good. How are you? Thanks for having me back.
Oh, thanks so much for being here today. And looks like the dollar is finally taking a breather. So, you know, it's a great time to talk to you about what your views are, if this is going to be maybe just a real dramatic bear market rally in cable or something more significant. So go ahead and start wherever you want. If you want to start pound dollar, that's fine.
Okay, great. Yeah, let's start with cable. So, yeah, everyone's been watching this really steep downtrend the last 2 months. And I thought we would stop at the 50. You know, I like the 50% retracement, but even below that was these lows at 30, 50, and some of these former highs. And if you trade cable for any amount of time, you know that not just $1.30, but really $1.30.50, and that's kind of where we've seen this downtrend look to bottom out. So, kind of drilling down into the 4-hour chart. Looking at this bounce that we've been undertaking for the last, well, maybe week and a half, 2 weeks. Yep. All eyes right now are where we're currently at is $1.3260. I think that we've bottomed, and I think we're going to see a rally higher. But we have to get through some of these areas of resistance, and the big line for me really would be $1.3350. So I was watching that level on the way down. We broke that level, and that's when I got convinced that we would at least head, going back just to the weekly, we would head into this 50% line, and we did. You know, we broke 33.50, we got to 130, 180, and we obviously got lower than that. And when we got to $1.30.50, I started to get wary, just because that's just a big level for cable, and it kind of on the way to $1.30, and after 2 months of a downtrend, I figured that that break of the 50 could be a bear trap, and so we've gotten this nice rally higher. Look for this, I think, to go a little bit further, and we want to see if pound can push above 133 and ultimately close again above 133.50. So we got a couple attempts back in June before we broke down further, and we want to see what happens on the upside.
Okay,
otherwise,
so above 350, Lydia, above 350 would take it to about what, 5.5, 36, because I want to bring it back to your previous chart and see what your thoughts are, because a lot of people are talking about the euro possibly putting in a head and shoulders formation. And if you look at, I think it was a daily you had up on the pound, maybe it wasn't, maybe it was a weekly.
Yeah.
Okay. All right. You see what happened on the left before we went to 141, and that's a support that it rallied to about 36.5 and pulled back to where we're bottoming now, and then made a new high, double top, that maybe we get a right shoulder, and if it had symmetry, you could take it up to 136. What are your thoughts on that?
I like 136. I like 136. If we can get above 130, 350, I think we have a good chance of heading towards 136. And just to take it to the daily chart, that starts to retrace this whole entire downtrend. So we want to finally start to see a correction of this downtrend and taking us into 136.50. That's exactly where we would want to see what happens. I mean, I think that would be the test of the market.
Okay, great. So we're kind of on the same page that that's a possibility, and your trigger is going to be closes over 3.5 for that to become viable.
Yes, 33.50. Yep, exactly.
Okay, cool. All right. So what about crosses in here?
All right.
Still in the range.
The euro. So speaking of the euro, this hasn't been a fun one because it's just
it's like Groundhog Day.
Yeah, yeah, it's been range bound. It broke, back in March, it broke lower to 86.50, and then we ranged lower, which to me was an indication that we would break lower still. And what was been interesting is that when we had that bout of pound strength, we weren't moving lower. And then when the pound started to drop, we weren't really moving higher either. So we've been stuck in this range between 88 and 87.30. We broke higher last week. And I didn't expect for it to go, full the train just to leave the tracks. No, what's typical after we break a range is that we had a retest of the range top, and we finally got that yesterday. And now we're looking at a bit of a bounce here. 88.50 has been the line I've been looking at for a long time. So when we're in this range, every time we extend the range, we always get resistance at 88.50. So that break finally got us above 88.50, but no real closes. And so watching today, as we bounced off of 88 and those range tops, we want to see if we can get back above 88.50. It looks to me like sellers are piling in here. So really what we're going to look at is we got Brexit news, I think, tomorrow. And then we're also going to want to see how the euro, or I guess how the dollar moves against the euro after non-farm payrolls. And that will kind of determine what we're going to get here out of the euro pound. But really, I mean, honestly, we could be stuck in a range higher. We could stuck with 88 as our bottom, and then we can. So
maybe one or two closes above 88.5 will be convincing for the upside.
For buyers to jump in there. I think that's what it would take. But we would have to be careful of ranges, because if we go back to the left, you see we were in a range between 89.50 and 88. So this one has been a ranged play for sure. If you want to practice your range trading, this one is the one.
Yeah, definitely. So I know that you weren't a big believer in the yen rally, or basically really yen weakness. So what's a guppy saying to you here? Similar situation that kind of looks like we're in a bear market, and we're in a bear market rally phase, or what's your work saying here?
I think for this one, I think we are going to see. So the weekly chart looks like this, practically on the rest of the crosses: the Kiwi, Aussie, Canadian dollar, where we're starting to work, where we're working out of a fib move. So I like the pound yen higher if it can get above 148. Right, 148 has been that line. I mean, really since last year, since the end of 2016. And when we drill down a bit, I think my daily will look better. Yeah. So we got this nice, again, another downtrend, and we bounced really into the fibs, held 148 as resistance, and we have this failed low. So in my work, when we see a failed low after a fib move, we tend to get a move higher than the corrective high. So this move that we're working on here, and it's been very choppy. Yen strength hasn't been, or weakness hasn't really been consistent despite what equities are doing. I expect a move really above 148, and a move. If we can break the 618, then I like a return to 156. Really.
So is a failed low synonymous with the fact that the market did not make a new low and put in a higher low? That's what you mean by a failed low at 44?
Correct. Right.
Okay.
Because in our fib, regular fib rules, once we correct into the fibs, we should get a new low. Well, in this case, a new low, right?
Okay. Got it.
Yeah, so we don't get that. We tend
just wanted people to understand it. Okay.
Okay, great. Yeah. Yeah. So I like a move above 148 from here. I think that we've gotten, if you caught the dip earlier, closer to 145, you're in good shape. I think you would be chasing it now, especially ahead of 147 is kind of soft resistance ahead of 148. But I like this. I actually do like this higher if equities can get some traction. If we don't see the S&P in particular above 2,800, then I think that we see more yen strength pile in here, and we're going to see 148 hold again. So if you're in this long, look to take profits around 148 or headed into 148. it could be that we get another hold at that level.
Can I switch gears just quickly? And it's just an opinion. I know you follow all the developments there, fundamentals too. I know you're a great technician, but I know you also follow what's happening fundamentally there. Even though
Yes.
I don't know what the difference would be between a hard and a soft Brexit, which do you think is going to be the outcome for the UK?
I think a soft Brexit is what makes the most sense. And I think after 2 years of going through this, I think Theresa May, when she came into office, she was a hard Brexiter, right? She was like a clean cut, we're out of here. And
Right.
as I think the political pressures and really the economic realities have kind of hit her desk, she's now pedaling for a soft Brexit. I actually think that's the outcome. I think, again, as the economic realities have hit, Great Britain doesn't want to leave the EU. I mean, why would you want to leave your biggest trading circle and all the amenities and accommodations that come with it? You don't want to do that. And they're starting to see that now. So I think a soft Brexit is what is now going to be pushed for. And we're going to get those news on, I guess we're supposed to get a little bit more news on that tomorrow. And I think anything that shows a soft Brexit being accepted by not just May, but also Parliament, I think we see the pound rally. So some of these weekly fibs could actually play out into some new highs.
Okay. So a soft divorce, even in marital issues, is a better way to go. What do you think? Work it out, not be enemy.
Go with the hard and fast separation.
Yeah,
I mean,
yeah, maybe when your spouse is, still has to co-parent with you. So any divorce, make it a soft divorce, right?
Right.
Okay,
When
anyway.
children are involved, you have to have a soft divorce.
How about against the commodity currencies? We're finally getting a pop, and they've been under pressure, all kinds of pressure because of China, potential trade war, and Aussie's been under pressure. But we're starting to get a little heartbeat in Kiwi today. So what's Lydia Finkley seen in these?
Yeah, so same kind of weekly chart just to show that.
How orderly this one is.
Yeah, this one has been fun if you can catch the dips. It's been very, very, it's been really a lot of fun. So the Kiwi probably has taken the lead on weakness here with the RBNZ, Reserve Bank of New Zealand, coming out just last week, extremely dovish in the face of a lot of these other central banks being with hawkish sentiment. So we're seeing a little bit of a pullback off the new highs this week. And I think that this one just continues to move higher. And really with the Kiwi, it's a big contrast between the Reserve Central Bank sentiment and sentiment versus like the Federal Reserve or even the Bank of England, even the European Central Bank, which are all more hawkish than the RBNZ is going to be probably looking into the rest of the year into 2019. So I like any dips. For buying, and you can see this uptrend that we've been in has been a nice. It hasn't been a grind. We've got a nice move. We move a little bit, we correct into the fibs, we move to new highs, we correct into the fibs, we move to new. So that's exactly what we've been looking for. And today, or I should say this week, I guess this happened yesterday, we have a failed high. So here's a failed high where we just saw a failed low. This dip then, so this move then should take us into the fibs a bit more. So we want to see a dip.
Pound Kiwi like 50% like cable does, or have you noticed it reacts more to 61.8?
It reacts more to 61.8 because the pound Kiwi can swing. I mean, this one can really swing. So it likes a 61.8, and even some of these fibs, like these are shorter fibs. I like to say they're shorter fibs, and when you see the Kiwi in particular reacting well to even these short fibs, you know that your trend is strong. So I like a move here into 194. It'd be some of these former tops that we've had before the breakout this week's breakout. So I think that would be a great retest. If we see 194 holding, that's a great buy. And I think really Kiwi's headed into 198.50 again. You know, I've been looking for $2 on this one for quite some time, but we keep failing at 98.50. And I think this one could head right back to that resistance.
Close enough for government work, Lydia. Do you ever cover or pay attention to, someone asked me about it and I don't even have it on my watch list, pound Swiss?
You know, I used to watch the pound Swiss even after you know, they pulled the rug out from under the market with that peg. Yeah, I used to watch the pound Swiss, and it has some moves, but I really don't like trading against central banks. And so when central banks are really apparent in the market, I remove myself from that market. And the Swiss National Bank, I'm not sure about it. Maybe in the last couple of years, I really stopped trading the pound Swiss back in 2016, 15. They were just, you know, they are active market manipulators. And the Bank of Japan, quite frankly, is right behind them. I mean, I think we have a failed low. Just to go back to the yen real quick, I think we have a failed low in the yen because I think the Bank of Japan is in the market and not wanting to see its currency strengthen with all the risk aversion, with the trade wars, with you know, weakness in equities. I do think we see the Bank of Japan in there a bit, but that hasn't been reported. But the Swiss National Bank is very blatant and very brazen, and have. So I don't trade against.
Well, you know what? It only takes one. You know, I mean, if you're a great cable U.S. pound dollar trader, you don't even have to trade the crosses.
Oh, absolutely, right?
You know, a lot of people think they have to be portfolio traders, but you know, Lydia, I saw guys when I was on the floor in Chicago that never left one trading pit and knew one market like the back of their hand. So really, all it takes is a few to pay attention to. And if you need landmines, you know, delete it. Don't trade it.
Exactly. Narrow your portfolio, narrow your watch list. I mean, you know, concentrated bets right now, you know, are the way to go. It's just being discerning. It's just really picking the best trades or with the best movements, you know.
Someone once told me if you don't remember the last price of whatever you trade, you're trading too many instruments.
I like that. That's I like that a lot.
You could use it. It's not mine. I don't know whose it is. We'll give anonymous credit. Great. All right. Why don't you take us to your site, Lydia, and you know, let the people know all the different things that you do. I know you're you know, a Renaissance woman. So tell us about your business model.
So I also mentor and coach new traders, or traders who feel like they need to get through the learning curve a bit faster. So I'm sure many of you listening to Dale, and myself included, it took many years to get to a place where you're comfortable trading markets and you know which pairs you're going to trade and look for. I condensed that learning curve to 8 months with the beginning and intermediate course. And then students who want to stay on with me because they want the guidance, they like the one-on-one approach, they can go into the advanced. So that's Learn with Lydia. You can get a lot more about the coursework and the mentorship there with Learn with Lydia. I'm also a registered investment advisor as I help people with their portfolios, not just retirement, but also just looking to expand their portfolio with different asset classes and grow portfolios that way. I have Invest with Lydia. You can get more about my investment advisory work and the RIA I work with there. And follow me on Twitter at Faith.Might. So my blog is Faith.Might FX, and you can catch some of my analysis there. But I really am a micro blogger. I love the tweeting and just posting a chart. And so you can catch me on Twitter at Faith.Might. And at least try to post a chart a day with another commentary and things there too. So, to find out more about my work, it all begins and ends here on the blog, Faith.Might FX. And I welcome your questions. I welcome your follows, and I'd like to work with you. So check me out.
Beautiful, Lydia. And thank you so much for sharing some real interesting levels on everything cable today. And I hope you and your mentees and your RIA has a great summer investing and trading season.
Thank you so much, Dale. Same to you and all of you.
All right, Lydia. Good hunting. Good luck on the NFP tomorrow, and thank you once again for being with
Thank
us.
you.
All right,
Thank you
everyone.
so much.
Lydia Finkley, you know where to follow her, and her Twitter handle is @FaithMight. What a great handle, because you need faith for not just trading, but for everything in your life. So we'll see everyone for the NFP. We'll be here before the release. And don't just count your pips, count your blessings. Good luck the rest of the day. See you for NFP Friday. Adios. Thanks again, Lydia.